This is still the V-shaped gathering that people hate the most. It has a lot to do with when prices fell in a waterfall fashion until April, of course. No one likes having stock on hand. A lot of people sold their stocks at the lows. But we know that a clear low has been reached when the VIX goes from above 60 to below 30. Well, I feel like we've been going up a wall of worry. I mean, a lot of people thought that trade wars, taxes, and the fight between the Fed and the president would really shake up the markets. And there has been some change, of course, but I think these are the types of bull markets that last the longest. Even with all the trouble, when the market goes up, it really means something. In today's movie, both Tom Lee and Cathie Wood have very important things to say. To begin, I'd like to share with you some of what Tom Lee said in his most recent interview. He talks about a lot of the new information from the government, the Fed, inflation numbers, and other sources. And I really believe that this will have a huge effect on what the Fed does in the next few months. This will, of course, help make monetary policy a lot easier. This is what we want to find. Are you guys from the last bull run? If so, you know better than anyone that crypto goes completely crazy when the money printing starts, right? That's what I think we'll be seeing here very soon. But Tom Lee takes this apart and shows us how it looks from above. Right now, I want to play that quickly, and then we'll talk more about Cathie Wood in a moment. Click like on this video so that everyone in the XRP army can see it. Now let's start. The V-shaped gathering is still the most hated one. It also has a lot to do with when prices fell in a waterfall fashion until April. No one likes having stock on hand. A lot of people sold their stocks when they were low. But we know that a clear low has been reached when the VIX goes from above 60 to below 30. And now you can see better. Tariffs aren't as bad as we thought they would be, and the effective inflation has been pretty weak. Plus, inflation is much lower than people thought it would be, even when taxes are taken into account. The bond market doesn't believe the Fed, even though they're holding now. They think the Fed is 2 cuts behind. If you look at the 2-year, it's now 42 for the 10-year, which means the Fed can be less strict over the next 12 months. This is good for stocks. In spite of this big, beautiful bill that some say will add $300 billion, 0 cents to our debts and other problems, you're seeing the 10-year go down. Can you explain this? Yes, it shows that markets don't just look at the US's budget when they think about its ability to pay its debts. I believe that the US has a lot of secret value in its natural resources, buildings and gold, all of which are worth more than they are worth now. It's kind of true that the US can find buyers for its bonds when people say it can't. The coins will be stable. Any foreigner who owns vaults will have to give up their coins because is that just a short-term problem? As in, after a certain point, you're kind of living in your own world. Yes, it relies on, in other words, safe coins are worth 250 billion right now. Just so you know, there are about $10 trillion in circulation right now. That means safe coins can get bigger. A lot of stablecoin deals take place outside of the US. In a world with steady coins, the dollar might actually be much more popular. But, the important thing is that it's at 4.2% for the 10-year. I believe that the bond images are mostly true. The US should not have such a big imbalance. But for some reason, we're not yet at the point where we can't pay back our debts. If you still look at the end of the year, your goal is still at 6,600. That's about 8% more than where we ended the day on Friday. Yes. And that's why I think people don't think there's more good in it. The market's PE can go up a lot. So I think there's room for growth up to $6,600, 0 cents. 5 shocks have already happened. Then there was the tariff shock. Before that, there was the COVID shock, the supply chain shock, the inflation shock, and the Fed's fastest rate hikes in history. 5 shocks in 5 years. Yeah. And the money kept coming in. If this were a stock, we'd say, look, if you tried to kill it 5 times and it still made money, we'd give it a much higher multiple. I want to go into more detail about what Tom Lee is saying because I believe it is very important. Yes? He's saying that the S&P can grow by 8% from where it is now, which is what we're talking about. There have been times in the past when the S&P was able to grow that much and Bitcoin went up 50%. That is, or more during those same times, right? It's clear that the stock market is a lot more stable than the cryptocurrency market. This one has a much bigger market capitalization, a lot more people dealing on it, and all that good stuff. It's not so good for the crypto market. The business is still growing very quickly. Because of this, I do believe that if what Tom Lee says happens, that is, if the S&P goes up 8% and hits 6,600, as he said, Bitcoin will likely go over $150,000, 0 cents per coin, and maybe even reach $175, 0 cents. It becomes very clear that that's a likely outcome when you look at all the times in history when this has happened. If Bitcoin goes up to $175, 0 cents, XRP could reach $20, 0 cents per coin. XRP has gone up about 10 times as much as Bitcoin in the past when the price of Bitcoin went up by 50% or more, right? 5x when Bitcoin goes down by 50%. Okay, so yes, I do believe that XRP, HAR, and other altcoins have a lot of room to grow. Also, Cathie Wood has something to say here that I think you guys should pay attention to. She sees things in a very different way, and she's also paying close attention to what the Fed is doing here, which I think you should know. I'll break that up after we're done. Now, let's hear what Cathie Wood has to say. In the coming year, well, I feel like we've been going up a wall of worry. I mean, a lot of people thought that trade wars, taxes, and the fight between the Fed and the president would really shake up the markets. And there has been some change, of course. But these are the types of bull markets that I think will last the longest, even with all the problems. There's a clear message there. Based on what it means, I think interest rates will likely be going down soon. Also think that the housing numbers are something that a lot of people aren't paying attention to when they look at the inflation numbers. They get in there after a long delay. We believe that the change or focus on just a few stocks during the bull market was very bad for the market. That's changing and the market is getting bigger. And I believe that deregulation is one of the most important things that this government is doing to free up wild animals. 100%. So freedom is exactly what's going on in the crypto space. This is what's going on with the Genius Act. This is what's going on with stable coins. It's really amazing to see how quickly things are changing for the better. There will be a lot of stable coins that people will want to buy, and XRP and other big crypto companies will be able to form a lot of big relationships. There will be a time of rapid growth, right? For example, what happened in 2020 and 2021 makes me very sure that this will happen. As you may know, 2020 and 2021 were huge years for crypto because regular people went crazy and bought things that didn't make any sense. This bull run is very different from the last one because we have utility investors on our side this time. It's really cool to think that banks and other large institutions might start using digital assets on a large scale, and that regular people are also becoming more interested in them. This makes things better in the real world, and XRP is likely one of the best coins that can do all of this.